Hey everyone, Coach Investor back to another video for today. So you're probably already tired of hearing about, well, the layoffs at Google, at Amazon, Microsoft, etc. Now, I'm here to say that losing your job is never fun. Just this year, we're already over 40,000 layoffs just for Microsoft, Amazon, and Alphabet alone. So the tech industry is obviously getting hit by these layoffs. Overall, unemployment is still around 3.5%, so still, let's say, relatively low. But that's because the other segments, the other industries are still doing quite okay. Let's see what happens. Let's see what the Fed decides to do. Because right now, we see inflation coming down. We see, obviously, layoffs with regards to tech. But the overall unemployment market is still fine. It's still strong. So who knows, maybe a soft landing is possible, unless the Fed decides to destroy the economy a bit more and keeps on raising those interest rates. Let's see what happens in February. Now, with regards to Alphabet, obviously the thumbnail says it, the good and the bad. So let's discuss the good and the bad in this video. First, let's look at the current state of Alphabet today. So as you can see, it's pretty clear here with regards to revenue. It's been stagnating for a couple of quarters now. Free cash flow, still a money printing machine. The last 12 months, $62 billion. Of course, it has come down a little bit. Return on equity, to me, still fine. 26.8% has come down as well. Okay, that's usually what happens when you see the top two things here. Now, when it comes to PE to growth, so price to earnings to growth ratio, in the next 12 months, we're now at 1.12, 1.14. So in my opinion, my eyes, if you compare it to the other industries, just over 1 is pretty cheap to me. Of course, it can be a bit cheaper. It was already cheaper. It was actually under $90. So the PE to growth was closer to 1. Now, what I do want to say here is just because the business, as you will see in just a bit, is slowing down from a profitability standpoint as well, you can clearly see that the shareholder value here is, well, still growing. If you look at the shares outstanding, for years and years, this has been going down, 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 which means if you bought shares, let's say in 2018, well, and let's say the stock price hasn't moved much, well, right now your shares are worth more because the company is such a money printing machine, free cash flow positive, over $60 billion, it can buy back shares whenever it wants. But of course, not everybody really cares about this right now. You still want to see continued growth, especially if you see that it has a forward PE of 20 times. Now, for a company that is growing around 8% year over year, some say, oh, that's a bit too much. Some say, that should be fine, especially when you know that the cloud business right now is still unprofitable and you compare it to AWS and Azure and you see the potential there, then you might say, maybe this is an opportunity. But before we continue and talk about the business, let's first make sure that you hit the thumbs up button and subscribe if you enjoy this type of videos. It will really help me out and help the channel out. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So let's have a quick look at what Sundar Pichai, the CEO of Google and Alphabet, has said in this little blog post. So we've decided to reduce our workforce by approximately 12,000 roles. Over the past 2 years, we've seen periods of dramatic growth. To match and fuel that growth, we hired for a different economic reality than the one we face today, just like with every other big tech company out there. But I've called this out numerous times when covering Google. If you look at the number of employees, the growth there quarter over quarter, even in the last 2 quarters, I said this is not sustainable at all. We're going to have a look at the numbers in just a second, but I do want to touch on what he's saying right here. A clear focus here on one thing. Pivoting the company to be AI first years ago led to groundbreaking advances across our businesses and the whole industry. Thanks to those early investments, Google's products are better than ever. And we're getting ready to share some entirely new experiences for users, developers, and businesses too. We have a substantial opportunity in front of us with AI across our products and are prepared to approach it boldly and responsibly. Now, of course, the focus here is on AI, especially now that ChatGPT, OpenAI, is getting a lot of attention. We're going to touch on that later in this video when talking about the founders and the effect that they can have if they return to Google. Now, the number of employees. This was Q2. So They jumped from 144,000 in 2021 to 174,000 in 2022. Let's look at Q3 and you can compare them quarter over quarter and also year over year. So, like I said, Q2, 174,000 employees. And if you look at Q3, 186,779, which means quarter over quarter, they added 12,000 employees, which magically is exactly the number that they are laying off right now. Just so you know, in one quarter, they added the same amount of employees that they're laying off right now. And as you can see here, year over year, they added 36,000 employees. So they obviously been over hiring. Now, what does this mean for Google, the business, or Alphabet, the business? First of all, as you can see here clearly, Google Ads has come down year over year. Obviously, the ad industry is taking a hit, fine by me. But then if you look at all the rest, especially Google advertising, barely a growth year over year. Here, of course, total revenue, as we've seen around 6% growth or 11% on a constant currency basis. Of course, with FX headwinds, that was bound to happen. Now, when you look at operating income, operating margin as well, this has come down year over year from 32% margin to 25%. Now, here comes the big reason why, let's say. First of all, when you look at Google Cloud right now, it's still losing money. It's actually losing more in 2022 than in 2021. So, of course, getting your expenses under control is already a big boost to the underlying business, to the bottom line. And that's probably why the market reacted positively when that news came out. Getting costs under control right now is extremely important. That's what happened with Meta as well. They've been spending way too much while the main business, the free cash flow, has been coming down. The market was worried that the same would happen with Alphabet. That's why the stock crashed as well. And that's why when they announced the cost cuts, being more responsible, then the stock price goes up. Because as you can see, the business right now is stagnating and is becoming less profitable. Still printing money, but it was beginning to be less profitable than before, and the market took notice. Now, of course, it's not just because of those cost cuts that suddenly Google is back or Alphabet is back. No, like I said, currently the market environment, don't forget the majority of Google's business is advertising. So obviously the current advertising market is not really optimal. So obviously a company like Google is taking a hit. Whenever that will change, regardless of the cost cuts or not, the business itself will become already much better fundamentally, right? Now, of course, the cloud side of the business still needs to continue to grow, match that AWS Azure growth, but also maybe turn a profit. Will that happen in 2023? Let's see what happens. More likely yes than not. Now, let's talk about the AI threat here. Of course, we've talked about ChatGPT and Microsoft, their investment there and the threat to Google, etc. Now, a lot of people think this is just, well, a nothing burger. But if this was a nothing burger, then what I'm going to talk about next would not have happened, which is that the release of ChatGPT on November 30 has sparked internal concerns over the continued dominance of Google's search engine. CEO Sundar Pichai held meetings about Google's artificial intelligence strategy in December, and the company reportedly issued a code red after the AI bot rapidly gained traction. That prompted calls from Pichai to Page and Brin more than 3 years after they stepped down from executive roles, The Times reported. The co-founders remained on the board of Alphabet. Now, according to the report, Page and Brin had several meetings with executives last month to strategize about Google's AI and approve plans to incorporate more chatbot features into its search engine. Now, this is not the first time that the co-founders have been actually critical of Google's work, especially when it comes to AI. So apparently here, Vic, a former senior vice president at Google, told The Times the co-founder had always been keen on AI. Page was reportedly unimpressed with a new Gmail feature already back in 2008, saying, "Why can't it automatically write that email for you?" We're now 15 years later, and yes, Gmail can predict some things for you, but it's still not writing that email automatically using AI. Maybe That's why they issue the code red, and that's why they're probably bringing the co-founders back in when it comes to the AI part and the probable threat of ChatGPT. Now, of course, I know nothing changes overnight. I don't think that Google search dominance is going to change just like that because of ChatGPT. By the way, I'm currently on a month-long test trial of just using Microsoft Bing as my search engine. I'm in it for around 10 days right now. I'll have a full video review at the end of my month trial. Right now, pretty happy with the experience. Nothing really changes that much because, hey, both of them are search engines. Both of them will give you probably exactly the same thing. But more on that in a separate video 3 weeks from now. So, to conclude, the good, the bad, and the ugly. The good is Alphabet, Google, finally, cutting costs, getting costs under control. Second of all, it does seem that they're going to focus a lot more right now on AI than before. Whether you like it or not, it is probably because of the threat of OpenAI's ChatGPT. Whether or not the co-founders will have a huge effect on it remains to be seen. Of course, what's not great to see is that people are losing their jobs, but hey, that was inevitable if you're asking me, and it's not like Google isn't hiring anymore. It's probably the same story in each and every big tech company. They probably know and think that they can do the same job right now with less people. So overall, that's about it for this video. Obviously, do share your thoughts down in the comments below. What you think would happen with Alphabet? You think it's a great move, bad move? Just share your thoughts down in the comments below. And if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.